This fund invests in all the metals that we deem to be strategic for the global economy moving forward. We have a move to decarbonize the planet. We have a growth in EV vehicles taking place. We have a growth in infrastructure spend, especially on the grid infrastructure. All requires metals. And we've gone through a stage of undercapitalizing this industry for the needs that we need moving forward. We have many years of experience working both as investors and also for big mining, for big investment firms around the world. What we try and do is we get a lot of information of prospective investment opportunities. We do detailed due diligence on each company. Usually it entails going out to see the projects around the world. We then come back. We have further meetings with management. We do our own analysis. We have our own detailed financial models on each company. And in that way, we look at the valuation prospect. And when we see a significant valuation gap, that is when we look to build up a position. We also keep a very tight portfolio of only 35 to 45 companies. The metals industry is very volatile. Commodity prices, by implication, they tend to be cyclical. They tend to be vulnerable to sharp upswings as well as downswings. We also go through periods where interest rates rising. It puts pressure on the ability to finance projects, and also developing the projects itself has its own inherent risk. It's very difficult to bring a project on time, on budget. And that's one of the reasons why we like to go see the projects and go see the team that's going to be delivering that project. ESG is so important when we're looking. If you don't have a social license to operate, you're never going to operate a mine. It's worth nothing on paper or in reality. And we have our own team that does analysis on the ESG credentials of every company we invest in. We also partner with a company called Digby that does a analysis, ESG analysis on many mining companies there together. So we believe by incorporating our own ESG as well as Digby into the process, we are going to try and avoid the pitfalls that we've seen for a lot of companies in the past. There's always a time you want to be invested in mining funds. Usually it's during that recapitalization phase. We saw it through the 1980s, we saw it through the 1990s. We believe for the next 5 to 15 years, we are going to have to recapitalize this industry. And though that's the period where you want to be invested in mining companies, where metal prices have been under pressure, where we're starting to see capital coming back into the market. And I think we're at that junction right now.